What if I told you a single whale losing $105 million in Ethereum could crash the entire crypto market? That's exactly what happened yesterday during what traders are calling Black Monday, and it's changing everything about how we view Bitcoin versus Ethereum. I'm Alex from Moonward Capital, and today we're diving into the market chaos, the massive ETH liquidation, and most importantly, what you need to know to protect your portfolio right now. Hey, crypto family! Welcome back to Crypto Pulse. If you're new here, I'm Alex, and we break down the most important crypto market movements so you can stay ahead of the crowd. Yesterday, we witnessed one of the most dramatic crypto market events since 2022, with Bitcoin briefly crashing to $74,500, Ethereum plummeting to $1,410, and over $1.46 billion in liquidations affecting more than 432,000 traders. But the story behind this crash is even more fascinating. And today I'm breaking down exactly what happened, why it matters, and most importantly, what it means for your investments. Let's set the stage for what's happening. Over the weekend, Trump announced universal tariffs on China, threatening an additional 50% tariff if they don't remove their 34% retaliatory measures by April 9th. This sparked global market panic with circuit breakers triggering across Asian markets. Taiwan's index crashed 9.7%, its largest drop ever. Japan's Nikkei plunged 7.8%, and crypto markets weren't spared. Bitcoin dropped to $74,500, Ethereum collapsed to $1,410, and Solana fell below $100. But here's where it gets really interesting. The crypto crash wasn't just about macro fears, it was supercharged by a massive liquidation cascade in Ethereum. One whale lost an astonishing 67,500 ETH, worth $105 million, after their position was liquidated at around $1,650. Another whale holding 220,000 ETH, worth roughly $340 million, narrowly avoided liquidation by adding 10,000 ETH as collateral, lowering their liquidation price to $1,119. These cascading liquidations pushed the ETH-BTC ratio to a 5-year low below 0.02. Let me put this in perspective. The last time ETH was this weak against Bitcoin was February 2020, before DeFi summer even began. This is a seismic shift in how the market is valuing these assets. Now here's what's truly fascinating. Bitcoin has shown remarkable resilience compared to both traditional markets and altcoins. While the Nasdaq entered bear market territory with a 5.8% single-day drop, Bitcoin has already rebounded 6.3% from its lows. This strengthens Bitcoin's narrative as a potential safe haven during economic uncertainty, almost like a digital gold. We're also seeing this reflected in derivatives markets, where Bitcoin funding rates remain positive at plus 0.001965, while Ethereum funding rates have turned negative at minus 0.000297. This divergence signals market expectations of continued Bitcoin outperformance, a fundamental shift in how investors are approaching these assets during times of crisis. But wait, it gets even stranger. While Bitcoin stabilized and Ethereum collapsed, guess which asset surged an astonishing 27.5%? Fartcoin? Yes, you heard me right, Fartcoin. This meme coin jumped to 59 cents, reaching a market cap of $593 million on strong volume of $401 million. This kind of market disconnection during extreme volatility is truly remarkable. So what does all this mean for your portfolio? We're at a critical inflection point with several key events that could determine market direction. Trump's April 9th tariff ultimatum to China, the Federal Reserve's emergency meeting response, U.S. CPI data release on April 11th, and ongoing risk of additional ETH liquidations. Our analysis suggests 3 possible scenarios. Base case, 45% probability. Markets continue to stabilize with Bitcoin holding above $78,000 and ETH stabilizing above $1,550. Bearish case, 40% probability. Trade tensions escalate, triggering another leg down with Bitcoin potentially testing $70,000 and ETH falling below $1,300. Bullish case, 15% probability. Trade tensions ease, the Fed signals intervention, and we see a strong recovery with Bitcoin potentially challenging $86,000. So how should you position your portfolio? For our base case scenario, we recommend 46% Bitcoin, increased allocation, 16% Ethereum, decreased from 18%, 13% Solana, slight decrease, 25% stablecoins, increased for safety. The increase in Bitcoin allocation reflects its demonstrated resilience during this crisis, while the decrease in Ethereum acknowledges continued weakness in the ETH-BTC ratio and ongoing liquidation risks. If you're more risk-averse, consider boosting your stablecoin allocation to 40% until we have clarity on Trump's tariff decision and the Fed's potential intervention. If you found this analysis valuable, hit that subscribe button and ring that bell to get notified whenever we release these Crypto Pulse updates. And for exclusive access to our detailed portfolio recommendations and in-depth market analysis, check out the link in the description to join Moonward Capital's premium service. Now, I'd love to hear from you. What's your strategy for navigating this market uncertainty? Are you buying the dip or waiting for more clarity? Let me know in the comments below. This is Alex with Moonward Capital's Crypto Pulse, helping you stay ahead of the crowd. Remember, in markets like these, quality information isn't just valuable, it's essential. Stay safe out there, and I'll see you in the next update.